Hey guys, this is GD back again. So today I want to discuss my analysis on Bitcoin. So last time when I did a gold analysis, I mentioned that Bitcoin is also part of my portfolio, and I have around 5% allocation to Bitcoin. And Bitcoin has similar characteristics like gold, right? I mean, it's a store of value. It's people call it digital gold, and like I mentioned last time, its total portfolio valuation allocation for gold and Bitcoin combined together is 15% for me. uh, Usually if you heard the gurus like Paul Tudor Jones and all, they will say allocate 1% of your Bitcoin, of your allocation to Bitcoin. But I want to say that I have 5% of my assets in Bitcoin, because I'm extremely bullish on Bitcoin. If you I just want to tell you guys that Bitcoin is kind of still a risky asset, compared to gold, who has proven the trust, from last 4,000 5,000 years, like I mentioned in my video last time. Bitcoin is still newer. I would say it's 12 years old, so it's still in a very very early stage. But I have done my research and analysis, and I have a feeling that Bitcoin is going to go much higher. So I am ready to take that risk, 5%. Just so that guys, right? I mean, even if you are taking 1% bet, be prepared to lose all of it, and I am prepared to lose 5% of my assets if it goes to zero, right? I don't think so Bitcoin is going to zero. Bitcoin is going much higher, but I'm just telling you guys that it's a risky asset, so please be careful. I don't think Bitcoin is going to zero. I think Bitcoin is going to go much higher, and that's why I'm allocating 5%. So I'm taking a risk, but I feel that that risk is worth taking, because the points that I'm going to go through today is it's kind of giving me a lot of trust and belief that Bitcoin is going to go higher. So before we start the video, I request you guys to please subscribe to my channel and like my videos. It gives me a lot of encouragement. I spend a lot of time reading different articles, watching different videos from different people to understand Bitcoin. It's not easy to kind of go through these articles and completely understand, because it's a very very new asset, right? I mean, so I request you guys to please subscribe to my channel, like my videos, so that whenever I upload video, you guys get a notification. So let's get back to the Bitcoin analysis. So some of the points, right? I mean, they're very very positive triggers. So Bitcoin has evolved from last 12 years and survived, right? This is very important. So when initially Bitcoin came, 3 4 5 years, nobody knew it. In the last cycle, mostly people came to know it in 16 cycle. And after that also, the Bitcoin went up to $20,000, and then, excuse me, $20,000, and then it went down to, I think, $3,000 to $4,000. So it's a very volatile asset. I mean, it's a speculation, I would say. As of now, people are treating it like for trading, but going for a long term, I think it's going to become a store of value. So when the asset is so volatile, right, obviously it's going to go from 3,000 to 20,000 to 5,000, 10,000. It can bounce around based on sentiment, right? So but 12 years it has survived. And major thing is why Bitcoin, and not other altcoins like Ethereum and Litecoin and all those stuff, because Bitcoin is still having a market 60 to 70% market share, right, out of entire cryptocurrency space. The other 30% is like other coins, like so many altcoins have come now, Litecoin, Zcash, Ethereum Cash, and all those things. So but this is having the highest market share of 70%, and we have seen time and time again, right, be it in stock market or be anywhere else, the leader takes all, right? I mean, if you see the companies like Amazon in e-commerce retail, it's a leader. It's amazing market share, 50% market share in e-commerce retail. It takes the huge profit out of it. Microsoft, again, a leader, monopoly. Apple again leader in smartphones. So I want to stick with winners and the number one. I don't want to go number two. Number two would probably be Ethereum, but I don't want to go number two because I'm getting 70% is like Bitcoin is going to dominate. So I don't want to look at any other coins. I want to just stick to Bitcoin, because if this thing goes up, I'm sure Bitcoin is going to go up a lot, so if the overall cryptocurrency space goes up, Bitcoin is going to be a leader. So that's why I would like to stick to Bitcoin. The second is Bitcoin is alternate store of wealth similar to gold and can be treated as digital currency. So Bitcoin is going to be, so when you say gold, right, I mean last video I explained that gold is basically nothing but a currency, and it's competing against all the other reserve currency like dollar or euro or rupee or any other currency like Japanese yen and all, right, because it's a store of value, right, goes up. Similarly, the Bitcoin is also same way, because Bitcoin is going to hold its holding power like gold, have a store of value, and then the currencies will depreciate against it. So just to give an example, right, I mean when the Bitcoin started, it was $100, right, I mean 10 years back. Today it is $10,000, $11,000. So it has gone up a lot, in terms of in terms of gold also, actually gold and dollar and all, right, I mean, so that's why, and there are reasons for that, because Bitcoin's supply is limited. If you see this point, right, Bitcoin supply is 21 million Bitcoin, so you can't go above that supply. So when the supply gets limited, right, I mean obviously the demand increases. So there's a supply demand dynamics, right, if the supply is less, demand is more, the asset goes up, right. So and it's very difficult to mine Bitcoin now, because there are halving cycles, so there are halving cycles for the Bitcoin. So with each halving cycle, right, what happens is the number of blocks that get rewarded is basically gets less. So we will cover these 2 points. So first is so there is halving cycle for Bitcoin, and I would say, so what is halving cycle, right? This is a site where you can track the different halving cycles. So every 4 years, right, the Bitcoin the halving occurs, correct? So what happens is in 2012 the amount of new Bitcoins issued every 10 minutes dropped from 50 Bitcoins to 25. In 2016 it dropped from 25 to 12.5, and in May 11 2020 it dropped from 12.5 to 6.25. So every halving cycle happens for every 4 years. So next is around 2024, right, the reward that gets allocated to miners, right, gets reduced. So what does that mean? So in 2012 the Bitcoin miners who mined the Bitcoin, every 10 minutes they used to get 50 Bitcoins, for every 10 minutes, right. Now in 2012 it reduced to 25, and in 2020 it's reduced to 6.25, and in 2024 it's going to be 3.125. So it's very, very hard to mine the Bitcoin as the time goes by, every 4 years. So and 18.4 million Bitcoins are already in circulation. So there are very less, 2.5 million Bitcoins are about to mine, and in 120 years, right, in 2140 last Bitcoin will be mined. So the supply is fixed, 18 million, right, I mean sorry, 21 million total supply. You can't mine more than that Bitcoin. So that makes it as kind of, I would say, scarce asset, right, I mean is much like gold. Gold production, as I mentioned last time, it was like 1% a year, right, I mean, and this is going to stop after 2140, and as you see every 4 years the blocks get allocated to the miners is going less and less. So it's harder to mine Bitcoin now, so that makes it scarce asset, and if demand goes up, the price is going to go up like anything, right, I mean, so if you see, so one other article I recommend you guys is I follow 2 macro people very closely. One is Lynn Alden and one is Raul Paul of Real Vision. So Lynn Alden has written a very good piece on the Bitcoin, 3 reasons I am investing in Bitcoin, right, and please go through this article. It's going to take some time to read out, but she has explained it very, very well, that why Bitcoin will go up, right, I mean, and the halving cycle, right. So what happens is in each of the halving cycle, right, the Bitcoin shoots up like anything. So if you see, it started in 12 when the 12 halving cycle. So in the first halving cycle, right, I mean 2009-8 it was $0.1, right, I mean it went to $10, right, in 12 or 13. So like how much, 100x I think, right, In the 2012 halving cycle, after 2012, so what happens is within 18 to 24 months, the halving cycle occurs, so 12 halving cycle occurs. So in 13, right, it went to, $10. From in 12 when the halving cycle occurred, in 13 till 16, if you see, it went $10 to $1,000, right? So how much is that increase? 100x increase, right? First halving cycle. Look at the second halving cycle. 16, it was 1,000, it went to 10,000, right? 10,000, actually it went to 20,000. This is 10,000 line, but we all know that it went to 20,000. So what happened is first halving cycle 100x, second halving cycle around 20x, right? 20x, then it's a flat. Now 2020 again halving cycle started, right? So if we see 100x, then 20x, next halving cycle we say 5x, right? Even if we say 5x, and it's going to be, actually I feel it's not going to be 5x, it's going to be 10x, because the supplies keep on getting reduced, right? And when we started this, the blocks were like 50 or 25, then 12.5, now 6.5. So the supply is getting reduced the day by day, years by years. And what happens is, if you were to assume that, and that is what Lynn Alden mentions in her blog. And I request you guys to, there are so many videos on Bitcoin from her in YouTube, so go and check those out. She thinks that in next 5 years, 5 to 10 years, it's going to go from 10,000 to 100,000. I think that's a very bullish target, but I would say, conservatively I would say it can go up 5x in 5 to 10 years. So I think that can happen, because the demand is increasing now, right? And the supply is reducing, so that's why it will go up, right? Demand supply dynamics. So those are the two things. Then Bitcoin supply is limited, right? And it's 21 million coins right now. It's 18.5 million already mined. So this is more like quantitative tightening, right? That is what makes Bitcoin a valuable asset like gold, right? Because you're going to have limited supply, and when Fed is doing the quantitative easing, it's printing so much of money, right? 3 trillion it print. Bitcoin is actually doing quantitative tightening, because the supply is not going to get increased, supply is going to get reduced, right? So it is a hedge against dollar, so that's why you can call it, it's a hedge against dollar, and you can compare it against gold also, right? Because it's going to do quantitative tightening, right? So that's what makes it a valuable asset. Now the next point is institutional investor, right? Now betting into Bitcoin in this cycle, right? Earlier cycles, if you see the 12 and 16 and all those cycles, mostly retail investors went into it, and there was no institutional interest, right? Now what is happening is institutional interest is coming back into the Bitcoin, or it was not there before. They are all deploying cash in the Bitcoin. Paul Tudor Jones, right, recently put 2% of his asset in Bitcoin. And more and more money, the institution money, is going to come in Bitcoin. Why? Because if you see the equity markets, all-time high. Bond markets, the yield is 0.60 or 0, right? So how much bonds will go up? It will not give you any yield, right? The chances of going the yield, how much lower the yield will go. So bond markets are saturated, all-time high. Equity markets are saturated, all-time high. Real estate markets, if you go and buy home anywhere, it's the prices are so high. So everything is running on all-time high. So what is the alternate asset? Alternate asset is gold and Bitcoin. So that's another reason that it's going to go up. Just imagine, guys, if you have read this article, there is a company called MicroStrategy, the company called MicroStrategy just invested $250 million in Bitcoin. This company is Nasdaq listed company, software company. I looked up, it's a market cap is around 1.3 billion. They have 500 million in cash, and out of 250 million they put in Bitcoin. So why? See, MicroStrategy has recognized Bitcoin as a legitimate investment asset that can be superior to cash, and accordingly has made Bitcoin principal holding its treasury reserve as a treasury strategy. See, usually in the treasury reserve you have dollars, right? Dollars and bonds. Now they have made Bitcoin as a reserve strategy. So basically they're treating it as like a currency, right? They're putting in treasury. So $250 million coming from a $1.5 billion company is just gives a confidence, right? And we look at this, we find the global acceptance, brand recognition, economic ecosystem validity, network dominance, architectural resilience, technical utility to make a Bitcoin a superiority as an asset class for those seeking a long-term store of value, right? Like gold, right? I mean, digital gold. So, imagine $1.5 billion company has $250 million putting in Bitcoin. Hedge funds are having 10 billion, 20 billion, 30 billion in assets. If they put 1% of their asset, let's say 30 billion, 300 million will come to Bitcoin, right? And imagine, I mean, it's, the money is like, money supply is like just there, right? I mean, Fed just printed $3 trillion, so there is a lot of money supply in the market, right? So, and this asset is like, how much? This asset is 200 billion market cap, So if you look at this, Bitcoin market cap is 230 billion, correct? So this is the thing, guys. The gold market cap is $10 trillion, correct? And total world wealth is around $250 trillion. This is what also I heard from Lynn in one of her videos, that she mentioning that 250 trillion is a total asset, and she mentioned that even if 1% of the wealth comes into Bitcoin, right, over a bit of time, this valuation goes to 2.5 trillion, right? So right now it's 230 billion, so it's 10x. It's going to 10x, right? And if the confidence increases, if more and more people allocate Bitcoin, to Bitcoin, this can even go higher than that, right? But even if you consider 1% of the asset, right, it's going to be 2.5 trillion. Still it will be like 25% of gold market cap, right? Still it's not going to reach like gold. It's going to be, so this is a probability, right? In investing, sometimes you need to see the probability, right, of the outcomes. And these are all the reasons why I feel that Bitcoin is not going to zero. It's going to go up. The company like MicroStrategy, right, if they're allocating 250 million, like it's 25%, 25 or 20%, 20 to 25% of their assets into Bitcoin, definitely they have done their homework, right? I mean, they are not going to put their money in an asset which is going to go to zero, and even if somebody wants to take a chance, they will take a chance with maybe $10 million, not $250 million, right? So guys, we need to think where the things are moving, right? I mean, we need to think about this, right? I mean, why these corporations are putting a lot of money in Bitcoin, why they are not putting it in dollars? Because dollar is going to lose its value, right, over a period of time, because they are printing so much money. So obviously dollar gets devalued, gold goes up, Bitcoin goes up, right? So those are the reason. Now, if you see, best way to buy Bitcoin is, either you can sign up for Coinbase account or Square app, and then Coinbase has wallet, right? So you can put it in the wallet, and there are so many other exchanges I am not aware about. There are so many exchanges there. Binance is there, and then there are so many, Gemini, I think, but I am not aware about any of those. Only thing I am aware about is Coinbase and Square. So that's one way. Other way is, so there is a Grayscale Bitcoin Trust, which is basically having its stock GBTC listed on the stock market, so OTC. So it's not listed on Nasdaq or main stock exchange, but it's listed on over the counter. So this GBTC is nothing but that they are the asset manager for this, and they will hold your Bitcoin, right? I mean, they have a higher fee, like 2% fee. But if you don't want to worry about your Bitcoin wallet, and you worry about somebody hacking your Bitcoin, or you have that fear that somebody will hack into your account and get the Bitcoin, then better to go with these guys, the GBTC stock, right? They will, you just buy the stock, they will buy the Bitcoin out of that, and they will store it, they will store it for you. So they will basically, obviously that's a big institution, so you can say that your Bitcoin will be kind of secure, because if these people are running this much of asset, then obviously they will have a security protocol, and lot of security built around, right? So GBTC itself is having, I think, $2.5-3 billion of market cap. So it's a huge, it's not like 100-200 million, it's 2.53 billion. So definitely they will have a good security built around it, right? To storing the Bitcoin so that it doesn't get hacked, right? So if you ask me, I have gone through GBTC, because I don't want to take a hassle of looking at my Bitcoin in my wallet, and having fear of getting it hacked, right? I would rather go through the stock exchanges and buy the GBTC, and have a peace of mind, right? So I'm doing that. You can also directly buy through Coinbase or Square. The difference between them is, GBTC is obviously expense ratio is 2%, so you are going to give money to those guys to store the Bitcoin. And also this GBTC trades at premium, right? So if the Bitcoin price is, let's say, $11,000, you would say the GBTC holding of Bitcoin will be like $11,500. So it's only $500 more. So that's the difference. But to me, I go with GBTC. I feel safe about that. That's what that's the and the last point is, hedge funds like Paul Tudor Jones. So Paul Tudor Jones, if you see the video, right, just put Paul Tudor Jones CNBC and Bitcoin and in the YouTube, and you will get the video. He's talked about it, right? He's talked about same thing, store of value. He has put 1% of the asset. So if you see 1% of Paul Tudor Jones' asset is, he is having $5 billion portfolio. So we are guessing that he's going to be 50 million to 100 million. He said close to 2%, so you can take 2%. So if you say 5 billion portfolio he's put 100 million in Bitcoin. So he has described it very well. It's a store of value. Currency is going to depreciate, dollar is going to depreciate, so Bitcoin is going to go up. So that's his thesis. So and other macro guys, like I like Rahul Paul of Real Vision a lot, and you can go and watch his videos also on Bitcoin, and he's very bullish on Bitcoin, and he's also allocating a lot of his money to Bitcoin and gold, right? So that gives a confidence, right? The macro people like Leonard and Rahul Paul, and then hedge fund managers like Paul Tudor Jones, and even the corporation, right, are putting money in Bitcoin. So that gives a lot of confidence, to put some money in Bitcoin. So that is it from my side, guys. As I mentioned, Bitcoin is a risky asset. It has survived. I think it's going to survive. So please do your own analysis, right, before buying it. This was just a pointer. I did a lot of research on this before putting my own money, right? So, and I feel confident about it. That's why I put it. But just be prepared, guys. It's a very volatile asset. It can go up 200, 300, 500, $1,000 in a day, and go down also by that much point. So just be careful putting your money into Bitcoin. And even if you put I would say, just don't worry about the volatility right now. Just try and hold it for some long time, so that way, you can run through the cycle, and that's what I would say. So guys, I request you guys to please subscribe to my channel and like my videos. As you see, I've given a lot of analysis, lot of good pointers about the Bitcoin and gold, right, to you guys, and it takes a lot of effort. So I will be really happy if you can subscribe to my channel, hit the bell icon so you can get the notification when I upload the video, and also like my videos. Thank you, guys.